Jumbo. Quite yet. Man, I'm loving to watch. All right, we just got a few seconds. Might as well start now. G'day, mate. How are you? How your mum? Hello, hello, hello. Hey, good morning. G'day, mate. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. If you're here to learn how to do technical and fundamental analysis with the overriding goal of putting together a trade plan, then you are in the right place. If you want to learn how to get rich quick so that you don't have to work and you can be independently wealthy tomorrow, and maybe you'll get a big yacht and fill it with girls with bikinis, drive Lambos, even though you're lazy, well, then you're in the wrong place. I'm a businessman. My name is Wayne McDonald. I'm an entrepreneur, which means you got to hustle. What does hustle mean? Work your butt off. Blood, sweat, and tears for years, but always ensuring that you have a return on your investment. So what does that mean? Well, you're going to have a strategy and then apply the right kind of tactics for the situation. That takes an incredible amount of work and knowledge and skill and education. But so does running any other business, in particular small businesses where you kind of have to do everything. See, yeah, if you're in a hedge fund, yeah, maybe you would have a team of associates and analysts doing grunt work for you. Yeah, but you are the grunt. You got to do all your own work, make all your own decisions after doing all your own research, putting together your own trade plans, and then executing, and you're responsible for the results, and that's your return on investment. So it takes a lot. This is not easy, and I'm trying to give you the real message, and I hope you appreciate that. That being said, let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is never indicative of future results, so you always should stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Another part of being in a business is having good service providers. So if you were running a startup, one of the first things you should do once you got some angel investing and you got some backing, then you should start looking at getting good service providers, a good law, right? A good law firm, a good accounting firm, because all these things are going to be important to running a successful business. Well, in Forex, the first service provider that you'll need before you need a lawyer, before you need accountants, is you need an execution partner. Yeah, that means a broker. When you pull the trigger, they actually enter your trades into the interbanking system. Wouldn't that be nice? At the same time, narrow spreads, wide swaps, fast execution speed, all those things are important. And if you need it, world-class customer service, and Trader's Way has all of that. They earned my loyalty and respect many years ago. Probably, 8 years ago, 9 years ago? And they would like to earn your loyalty and respect. So if you visit tradersway.com and open a demo account, they're going to do their best to do that. And you can start your successful Forex trading career with a trustworthy foreign exchange execution partner. Tradersway.com. Hey, let's take a look at the market right now. Dollar was strong, then consolidated, is a little bit weak. And, well, that makes sense because we're opening up a new 5-day trading week. How nice is that, huh? Do I trade indices? Yes. 3 weeks ago, I bought NASDAQ and I bought S&P 500. Yep. Cool. All right. Let's see. Great big pig down. Euro dollar up. It's a big week for euro. We'll talk about that later, I'm sure. Aussie was weak and now is gaining some strength, which is kind of cool, kind of interesting. CAD kind of trying to do the same thing, holding on to non-farm payrolls. Now they had a disappointing jobs number, so we'll have to pay attention to that. Yen was terribly weak and now is a little bit strong, right? And I guess you could say dollar was terribly weak and now was a little bit strong, right? And then Swissy. So, the only thing strong at the moment is euro. So why don't we take a look at some of that? Okay, let's zoom in a little more than daily. Okay. And I would say be careful on this one. Euro Kiwi. Interesting cross, right? Euro Kiwi. What do you think? What do you think? Do traders of Euro Kiwi use pivot points? Okay. Seems like it to me. So if you want to look at it from a bullish point of view, you would probably say up from here and up from here. And then, you'd probably look at R2 as a target, which is above us. So let me show you that. So a bull is probably thinking something pretty basic like this. Okay. And that would be the most aggressive target for February. Okay. That's what a bull would be thinking. What would a bear be thinking? Well, quite different, right? A bear is going to fib this. Oops, I wanted that pink. Okay. A bear is going to fib this because remember, they're going to have reverse fibs. So they're going to see a 50% kind of in this zone. And then they're going to look at a double top. So what would a bear do? Let me do that in blue now. A bear would look for something like this or like this. Okay. And that's kind of what we are at now. So you could, let's say you're a bear. In the day trading group, we've been working on trapping quite a bit. And even in the swing trading group, I think. So if you were a bear and you were trapping, which sounds funny, right? Bear trapping. It's just price action, so don't get all gobbledygook on me. Okay? If you're a bear, in this situation, you would simply sell this. Or, same thing, if you're a bear and you didn't sell this, you would look for a little breach here and then sell the little pullback. Okay? So to draw it differently, okay, you would sell, let's draw it this way. Okay, sell. And of course you could do both. Okay, so you could sell now because it's a Fibonacci retracement and you're confident, or you sell later, I guess, because you're not confident, but you'll sell the lower low role reversal idea. Okay, so I just showed you how to do it if you were a bear. Not that it's going to fall. I don't know what it's going to do. Why would you ask a YouTuber, hey, YouTuber, what's it going to do? Hey, help me make money. To make your own money. Okay, so if you're a bear, that's what you would do if you're a bear. Now, if that failed as a bear, what's the next one? Well, the next one would be here. You would do something similar. Okay, you'd trap it, maybe something like this. And your plan would be sell the top or sell the role reversal. And now you're stuck in this zone, which could probably give you some more up and then maybe some more down. Why would there be some more down? Well, you're a bear. Why wouldn't it fall if you're a bear? If it doesn't fall and you're a bear, you got some problems. Okay? Now, let's talk about Euro right now. The ECB and Lagarde, well, that's a B, ECB. That was a weird meeting. The net result of it is interest rate hikes are on the table, which is strange. But there's a lot going on, and I talked about this last night in the day trading group, and in the conversation, I remembered we talked about politics in Italy and the Euro Support Fund, or whatever it's called, Euro Recovery Fund. And then I just got sidetracked talking about myself or some arrogant thing. And then what I wanted to talk about, as well as that, is that the new German chancellor could bring some interesting color to the equation for a euro, and that could be less of this idea of austerity and maybe Germany spending a little more, as well as Mario Draghi's politics. And so Biden and Schultz will be meeting today, or I think they're just talking over the phone. And so that could be an interesting develop over the next, let's say, couple of months. If Mario Draghi keeps with the reforms and we get a more, more spending out of Germany, it could be a really interesting change in politics. And meanwhile, Lagarde is talking about, removing negative interest rates and all that kind of stuff. And it's a real interesting time for Euro right now. So one thing that we could also look at is, let's go to Market Watch. So you see U.S. 10-year is now 1.9. Remember, 18 months ago, this was 0.5. So interest rates are way, way hundreds of percent up. But what I wanted to see, I don't know if we can get this. Oh, maybe. Italian bonds. India, and Ireland, Italy, Italian. Let's look at the Italian 10-year. Okay. Year ago, 0.5. Now it's on its way to 2. Okay. That's interesting, but if maybe from this time frame, can I go 5 days maybe? So since the European Central Bank meeting, it's really gone up, huh? Look at from 1.25 to 1.85 in a week. To give you an idea of how important that is, That's the same as 3 months. Isn't that interesting? More has happened in the last 5 days than the last 5 weeks, for sure. Maybe 25 weeks. How do you feel about that? It's interesting, right? You think that's relevant? Let's just take a look back here. At the end of January, it was 1.25, and now it's almost 2.0. It's almost unbelievable. So something's happening, right? Something is afoot. Okay. Something's changing. Now, I watched an interview not long, 6 months ago or something, and the guy being interviewed, some investor, he said, Europe has never missed the opportunity to miss an opportunity. So anyways, we're in this situation where Draghi's got some political stuff he's doing, and if he does the right thing, that'll be good for Europe. If he does something different, then that'll be not by Europe, I mean Euro. So if he sticks to doing what he's doing, then the Euro Recovery Fund will give money to Italy, and that'll be good for the economy, and that's good for the Euro. So we need Draghi to continue doing what he's doing. Meanwhile, then you need Schultz to change sort of the economic positioning that Germany has been doing for the last 20 years to something different, away from austerity and more, dare I say, a little bit more like America, just like a little bit more. I'm not saying the American way is the right way. What I'm saying is the German way might change in a way that could be interesting. And by interesting, I mean supportive of the euro. Meanwhile, something is going on. Like you can see when I show you the bond yields, something is happening, and the language and maybe strategy of the ECB is changing. So if this all comes together in the next, let's say, 8 weeks, Europe might be really interesting. And if it collapses yet again, right, this idea of Europe never misses an opportunity to miss an opportunity. So if they catch this opportunity, it could be really cool. And if not, I don't know when the next good news shows up. Okay? So interest rates are going up everywhere in the world, right? Every major economy in the world, interest rates are going up, right? All right. So we'll do gold, right? We'll do gold, oil, Bitcoin. We even did some nat gas if you want me to do it. Hang on. I popped a little poll, a little quiz in the chat. Please take a look. Meanwhile, let's take a look at CAD. Once again, Euro has been strong. Remember, it's backward looking because it's technical analysis, right? Down, 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 right? Up, 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 down, down, buy, 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 up, 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 up. But we're in the stop zone. So, isn't this interesting? So, time to trap it, you'd think, right? What do you think? A bull is going to try to drive it up, and a bear is already trying to take it down. Okay? And you're going to use the bounces at support and resistance and or the breakout retest, what we call role reversals. Is that right, Lucas? Yeah, I'm a little surprised. I thought CAD would be a little bit punished more than it has been because of its because it didn't raise interest rates, but at the last meeting, anyways. But maybe this is still a little bit of oil play on it, and I think that's going to end too. But whatever, if you're going to buy it, that's a setup, right? But yeah. Okay, so anyways, 55% of respondents are correct. Australia is not going to raise interest rates in the next 2 years. The United States will. The United Kingdom will. Canada will. Euro might, so on and so forth. But the Australians have told us they're not. Okay, so we'll pay attention to that every day, actually. I'm just trying to make a point. Euro's been strong. I know that. It was ripper strong last week. Trying to make a point here. Okay? We hit the target and it stopped. Remember, I bought Euro last week and I exited on Thursday. So anyways, okay, interesting, right? Interesting drop. Can you see the little trap here? Let me use the box instead. Maybe that's a better way to draw this. I'm trying to, oops, let's do black so you can see it. And let's make it a little thinner. Hang on a second as I adjust. Okay. Okay, you can see that was a bottom. You can see that was a top, right? Drag it across. Okay. So somewhere in here, somewhere in the circle is probably an entry for you. Okay. Remember, if you're a bear, you're playing the top, and this is an R2. It's an obvious trade somewhere in here. And then this is the harder one to take, but nonetheless, it's a breakout. Maybe somewhere in there, maybe not. Maybe it's uncatchable, but then you would be trapping it now, right? You'd be kind of doing the same thing. Okay. And then there would be another one and another one. And if you're missing the point here, it'd be like, okay, bears sell at the top or the breakout. Milo says, yeah, monthly counter trade. Remember, though, is it a counter trade or is it profit taking? We're not really sure in the beginning, but I do want to talk about dollar later. But I want to show you how past performance does not predict future results. You hear that, NFA? They love that stuff. Check this out, bro. Okay. Straight out of the training course, Euro yen. Okay. Nice. Is it over? Oh, I don't know, but you should have taken profit is the bigger idea. Darko asked a question about the price of oil and the improving European economy. What did I tell you guys 4 or 5 years ago that would be the key to improving Europe? Remember, Europe was desperately trying to create inflation, creating and spending hundreds of billions of euros in the attempt to create inflation. What did I say 5 years ago? Maybe 8 years ago. Buy oil and drive up oil prices. I said instead of giving it to other places in their economy, which probably doesn't need it, instead of going negative on interest rates, which is a radical experiment, instead they should just buy hundreds of millions, if not hundreds of billions of euros of oil. Said if you want to create inflation, Europe, you can bail out China or corner the market on oil and drive up oil prices, which would drive up inflation. You guys remember that now? Ashish nailed it instantly. Drive up oil prices. Anybody remember that? Just Ashish? All right. Well, anyways, so there's nothing that the ECB has done that is driving up inflation. Okay? Oil prices are high. Yeah, and there's the supply chain issue, which will dissipate at some point, and even oil prices will dissipate. And then Europe will kind of fade back into where it is, or where it was. But the reason there's inflation now is because oil prices are high. Nothing else has really changed. Interesting, huh? Okay. So anyways, there's Euro Kiwi, Euro Yen, Euro Aussie, Euro CAD. What's right? It was strong last week and not strong this week, at least so far. Cool. Well, what about our friend the US dollar? Okay. This one I'm actually surprised about a little bit. I thought it might do one of these things. Okay. But the interesting play here, of course, is the double top. We did this last night in the day trading group because we meet on Sundays. Okay. And this is set this way. But I thought CAD might be a little weak for a month or two until the next CAD central bank meeting. Right, they didn't raise last time. The jobs report was pretty mediocre / bad, and you know, whatever. And I guess I should talk about the U.S. dollar too. But you know, I just didn't think CAD would be that strong. But I guess if oil's still going up, okay. But I have a feeling that I'm not the only one. All I want to do, right? I have a feeling that this still isn't going to work because of those things. And if oil tops, right? If oil tops out and we have a decline in oil, I think CAD will very quickly weaken. But this is a nice trade nonetheless. But I might be overthinking it. But okay, again, CAD raised and then they didn't raise. Poor jobs report. And then lastly, if oil stops going up, then CAD is just ready. Okay? CAD is ready to weaken, which pushes us up. Now, let's talk fundamentals and then I'll go through the dollar pairs. USD. Okay. You know what? Let me put it over here. Okay. USD. What are the positives for USD right now? Okay. The market was prepared for a bad non-farm payrolls. Non-farm payrolls was good. That's good for the USD because many market participants will say, oh my God, that means the Fed's going to raise interest rates even more than that we've planned. In fact, they might have planned for 5 rate hikes and then they pulled it back to 3 or 4, but now this is red hot again, so then they jack it back up to 5 in their mind. Which means it wasn't priced in, so now they might price it in. And that shift would once again be pro-dollar. Okay? And that's something sort of new right now. Also, when we're talking about risk, okay, we were risk off going into the January Fed meeting. Then we got through the January Fed meeting, right? So we started in Jan, let's say. Risk off. Okay. Then the stock market was down 20%, which is risk on now because you can buy yourself some deals. And we got through the January meeting. Yes, but you got to put it in context. That's not what I'm saying, your customer, but let me finish and I'll come back if you remind me. Okay. February is risk on, but does that mean all 28 days of February or that there just will be a risk on moment? Well, there'll be some up. If this is down, then there'll definitely be up. But what if that up happens in the first week? Whatever, I don't know, right? So then March, we roll back into the big Fed meeting now. They'll almost like 100% chance they're going to raise interest rates, but by 25 basis points or 50 basis points. And then what about the press conference? Right? Are they going to tell us more? And what about balance sheet reduction? And what about the next meeting? And how many? And and there's all this hype. So leading up to that, since it's risk, smart money would take risk off until we get through that, and then once again risk back on. So my question is, we planned for this, and we had this giant move this way in all these markets. So what if the risk on part has been done, whatever capital needed to be deployed got deployed, And now we just go back to the risk off idea. But you're like, but Wayne, it's still like the second week of February. Hey, all we expected was dollar weakness, and we got hundreds and hundreds of pips of dollar weakness. Do you expect more? Hundreds of, not, what did I say, dollars? Sorry, I can't think and talk. Hundreds of pips of dollars, hundreds of pips of dollar weakness. Do we expect hundreds more, or have we fulfilled that destiny? And we go back to like less aggressive risk on, and dare I say maybe back to risk off, because let's say between now and the March Fed meeting, I expect risk off. Is it starting today? Maybe. Will it start next week or the week after? Yeah, maybe. But between now and let's say March, I would, in my book, for sure, 100%. But I just don't know if it started today. And that's what gets interesting. Okay, now let me go back to your customer. Didn't you tell us before that raising rates would mean dollar weakness? Yes. Okay, because the economy is growing and we have inflation. The word inflation means dollar weakness. Okay, but then what did I just say? The pricing in of a rate hike that wasn't priced in, or that was priced in, then priced out, now is being repriced. So it's that change there, your customer, that I'm talking about. I'm not talking about the long-term fundamental. I'm talking about the change. Okay? Lesso says, for me, macroeconomics is risk off. Yes, but this week, there's something else going on, guys. So, like, I will be very macro risk on probably like April. So, right, so Lesso says risk off. Right now, it's not a risk off moment, it's a repricing moment. Okay? So most things are showing improvement and recovery. 78% of S&P 500 companies that have reported the last quarter results, the numbers have been good, better than expected. So, like, look, right? So if we're looking back a little bit, things are fine. If we're looking at let's say China has been going through contraction, but is now addressing it. And so, again, if you look back, you'll see, well, China's struggling. Well, what I'm more interested is that they're addressing the struggle now, which would lead in the future, one would think, improvement. If you look back, you'll see the struggle. If you look forward, you will see the recovery. I'm trying to trade the recovery. Okay. Now, as an economist, we pay attention to jobs, right? The jobs report came out on Friday. I actually downloaded the report within 1 minute of it being released, and I read it. And I read the subcomponents. Where are the jobs being added? How are the wages, improving? And right, so on and so forth. And when you look at things like ISM, you look at the subcomponents. So I'm constantly looking at the subcomponents, downloading government reports. But I also talk to people on the street. And one of the comments that I made talking to the day trading group last night, as we set up our trades, was I went to a farmer's market over the weekend, and I talked to everybody I possibly can about the economy. I ordered lunch from a Greek food truck. And I talked to the Mad Greek, I think his name was. And I said, hey, so I made my big order, right? I ordered 2 lunches for myself. So look, I'm trying to spread the love. Thank you. That's my Biden money right there. Talk about demand. I'm eating 2 lunches on that Biden money. So anyways, I placed the order, and he takes it. And then there was nobody behind me, and just, great, good timing anyway. So I'm like, hey man, how's business? And I had a conversation with him. And he's hired 3 employees this week. I'm like, oh, so you've been trying to hire and you've been able to hire? And he's like, yes. And he says he now has all 9 of his food trucks staffed, and all 9 of his Greek food trucks, that go to concerts and festivals and fairs and farmers markets, right? All 9 trucks are fully booked until October. Fully booked, fully staffed, 100% gangbusters. Holy smokes. But he was able to hire. He said he couldn't do it before. So last year was bad because he couldn't get people in the trucks. He couldn't hire people. Now they're fully staffed, and 2022 is going to be a good year. Interesting, right? And maybe Non-Farm Payrolls is talking about his food trucks. Because a year ago, he couldn't hire. Now he's like, I just that week hired 3 people. Just that week. And 2 of those employees were in the truck with him. He was training them himself. Cool, right? So always talk to people. Always talk to people. So that's not a government report. That's cool. That's like boots on the ground kind of stuff. But that's some of the best knowledge. So I'm going to do the same thing in New York City later this week. I'm going to talk to everybody I run into. How's business? Are you hiring? How have you successfully hired? Are wages up? How are you doing personally? What are your fears? Talk to everybody. Okay? Remember last year, I was in Florida 1 week talking to hotel staff and everybody else, restaurant staff, bar staff. And then a week later, I'm in like Wisconsin and I'm doing the same thing. I went from the southern border to the northern border of the United States, asking everybody, how you doing? How you guys doing? How are you guys doing? And it was bad last year. It was really bad last year. So I can't wait. I can't wait to see how things turn out. So long story short, if dollar gets strong, because let's say people were pricing in 5 hikes, and then things changed and they dropped it down to 4, and then things change again and they go back to 5 because NFP when it was supposed to be 100,000 or something, and it came out like almost 500,000. So that they reprice it, and the weakness that we just went through turns into strength. Maybe, right? Also, like I said, between now and the March meeting, I believe the dollar will get strong again because of the idea of risk off. Not that things are bad, but it's risk. So you're not going to, when you get close to that ginormous Fed meeting, it's this idea like, are you going to make a big bet? No. So where's the new money going to come from? Well, I don't think new money will come in. So the only thing left is, well, would people take money off the table if right before a big risk event? Well, yeah, I think that is much more likely than somebody saying, oh, I don't give a damn about the Fed meeting and interest rates and all that kind of stuff. I don't give a damn. Well, of course they do. So it's a behavioral thing, not an economic thing. And so anyways, if all that comes to fruition, watch for that. So I can tell you there's only 2 things that are statistically likely on this pair. And again, I covered this last night. If you were in my day trading group, okay, you would already be on this mentally. Okay? Bears will sell it. Bulls will buy it. and everybody else should take a walk. Which one's going to work? Hell if I know. I just know where to trade. How do you know? You just got to taking notes. How do you know it? You just got to know. It's like sentiment. Think of it that way. It's like sentiment. You got to be on the clue train. All right. All right. Euro. Have I told you you're my euro? Yeah. Speaking about Greek food trucks, this is the euro. All right, cool. So anyways, we got this in a giant trap. That's what we did last night. Let me, right? Can you see this? Oops. Let's do this in black. Let's make it a little thicker. Okay, this idea up here. This idea here. Okay. So, and we might just want to throw this in there, like something like this. Okay, cool. So, there's two things that you can think of here. You just love this move. And remember, there was a move before that. Cool. I caught every pip of that. Nice. Cool. Now what? Well, you believe this or you believe that. Notice that this just takes us back to this old orange line or red line. So it's not even a declaration of crash. It's just like, well, there. Which one do you believe? If your answer is you don't know, then stop trading. If you don't have a bias, if you can't develop a logical opinion, then stop trading. You're stinking it up. Okay? Stop stinking. Okay? All right, cool. Which means we did this last night. Again, where were we last night? What price? I don't remember. Okay? Which means we drew this. So a bull probably bought somewhere in there. What's that? What else are you going to do? Okay? Now, a bear, well, where would a bear sell? Do you guys, by the way, have you adjusted your trading, let's say, routine in which you ask yourself questions like I'm asking you? Because I do this with myself. WWWD, what would Wayne do? In a situation like this, I would say, if I was a bear, where would I sell? I would sell here. And I would sell here. Simple enough. If I was a bull, where would I buy? This is the only real price. Or I'd buy down here. Those are targets, right? Or eyeballs, maybe. Anyways, right? Arve's got Valhalla in his head, right? A hall of Viking kings inside of his head. Yeah, well. What's that, Ragnar? Lothbrok, he crazy. So anyways, right? Does that make sense, guys? Maybe I can back this out. I have this drawn, so we'll take a look. Yeah, okay. You could argue that. You could say, you'd buy it here or you'd buy it here, for example. Because you would look at this and you'd make a decision, whatever, pick your line. And you're like, yeah, somewhere here maybe, or somewhere here, right? And you know, bears are thinking the same thing. Well, they see this as a top, so a bear would take that down. But bears are also allowed to sell lower highs, so they're going to probably think something like that. So, bulls buy double bottoms or higher lows. Bears, okay, sell double tops or lower highs. That's it. Amateurs do some gobbledygoo mix of everything. This, and a whole bunch of other crap in the middle that nobody understands but them. Yeah. Cool. Take a look at this one. All right, talk to me, Goose. If I was a bear, okay? It's so easy when everybody's trying to please me, baby. It's so easy when everybody's trying to please me. It's so easy. Nothing seems to please me, right? Look at this, man. What would a bear do? A bear would do this, or a bear would do this. It's all right. Okay. What do you stink? See me hit you. You fall down. It's so easy. All right. Come on, Bubba. And already, huh? Well, this is the basis of strategy. The strategy here is all the way down to 69.69. And I will refrain from all the jokes. But I too have voices in my head. All right, cool. So let's drop into a 15 or even a fiver. Let's do a fiver. Okay? Okay, now we're in scalp mode. Strategy's done, son. So now what? Now you strategize. Okay? So where's the support? Where's the resistance? No. Trap. Okay? Trap it, Bubba. Cool. Nice. Okay. So you got to bring it downtown. Just mark your lines. I'm just going to mark it that way. That's all that's necessary for now. Cool. I want to do gold, oil, and Bitcoin, and then maybe I'll come back to this one. We'll see how she played out. Ciao. Gold, oil, Bitcoin. Oh, and I want to do Mexican peso. Sorry about that one. Peso. Okay. My oh my WTI. This is probably what's going on that kitty cat, which is a great, nice little technical setup. Despite it, the let's say the political and economic conditions of Canada, what's more important is oil prices. Despite all the other stuff, oil prices, right? Cool. Now, oil, remember there are two prices this week a bull would buy. 90.85 and 89.60. You knew that last week when we were here. Huh? Cool. So you're in, right? Good job. Good job. It's so easy. Everybody's trying to please me, baby. Okay? How cool is that? All right. But then you're like, but, okay, well, all right, great. Well, hang on. Let me get this off the Wix. If you're going to play, right, now take this. This one's already marked. Okay. Ask yourself now. I'm trying to make these straight. Sorry, I'm not trying to fit the curve here. All right. Ask yourself, where would bulls buy? Where would bears sell? Okay. As you can already see, I already have this chart marked out because we did it 12 hours ago in the day trading group, so that we're well on our way. The best target you could possibly hope for is 98, 97, 55, 97 something, 97.58. About. Okay, Bitcoin. I love a Bitcoin. Huh? I love a Bitcoin. Love it. Cool. It's done well for itself, huh? So, what's the target? Remember, I did this for you guys. Remember? You might recall I wrote down 33,333. And the top for Bitcoin, I'll tell you again, you're not going to believe me. I can't even fit it on the chart. How come? Why won't it move? This happened last time too. I think it's my indicators. I get rid of all that. No, I still can't. I can't even fit the number in. Wowzer. So let's say 33 all the way to 99. What do you think? Plausible? Barry, I don't even know where it came from, to be honest with you. So, yeah. Dude, I'm always testing stuff, you know. Ooh, spinning. There we go. Okay, now, so 33 all the way. Oh, it can do it now. All the way to 88. What do you think? Anybody on board with that? 33,333 all the way to 88,888. Well, we're not technically bullish yet, but if it's going to do that, it will become bullish. You can see on the medium term, we are bearish. On the shorter term, we are bullish, but we got to like run into these standard deviations. We got resistance above us, but at some point resistance might become support, and that's when it'll get really interesting. So again, you kind of trap it, support, resistance, and there's our zone right around 40. And now we got another one above us. Let's call that 45. And so what would a bull do? A bull would buy here or here. So let me draw that for you. Up, 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 down, down, buy. Up, 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 down, down, buy. What would a bear do? Would a bear sell in the middle? Not likely. Would a bear sell at the top? Yep. And they would sell a break. Sell a break one time. Come on. Man, that's a good one, huh? Sell a break. Yeah. Cool. And then I want to zip over. Oh, I didn't do gold. Gold. I still love gold. What did it do? Nothing. Okay, yeah. What did gold do? Gold went down. Gold came back. And we're at the same price that we were at before, which is indicative of nothing. Yeah, Barry. Well, that's the issue with the market. That it's going to be like that, right? So anyways, gold doing nothing. My oh my, WTI, just amazing, right? So again, just trapping it. Look at that. Lovely tulium. Look at that, huh? Huh? Look at that. I crushed it. Now what? That'll be very interesting. Okay, these are very, very, very interesting prices. And if you're not going to play that, then you got to play this one. No. So if you're like, Wayne, I disagree with this one. Good, disagree with it. Do what you got to do. Okay. Interesting, right? So if this comes down, and I'm not going to tell you the story. I'm going to leave this for day traders. Again, last night, the day trading group and I met in Asia. So we were already trading 12 hours ago. We've already done all this analysis 12 hours ago. Okay, great. One of the things we talked about, oil prices, the history of oil prices, and the relationship between oil prices this week, the White House, and Thursday, specifically news data coming out at Thursday that could change behavior and which would impact oil prices, which would then be set in motion for oil bearishness and Canadian dollar bearishness. I guess maybe you should be in the day trading group. If you want to join the day trading group, join FX Bootcamp. Pretty simple. FX Bootcamp's $88 a year. Dumbass of what? Yeah, a year, brah. Brew, if you're South African. $88 a year, brew. Cool. And then I will leave you with peso. Look at this, peso. All right. So you should know that 21 was our number, and our number was 21. We waited weeks, like 3 weeks for this. And then pa-chow. And then some son of a gun put a little orange line or a gray box there and stopped the whole thing. So look at all the trapping, guys. So anyways, interesting. What we're looking for is this kind of price action now, because ultimately bearish on this pair. Okay. And you're like, if I back out, you'll see what we're doing here. This is actually the second leg of a bull move, but down, 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 up, up. Okay. You see this? We already have it marked. Then what? Down, 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 up, up. Already got it marked. We're expecting some love out of this one, but sort of down probably here in February, then up in March, maybe all the way back to here, and then maybe 3 months down. Who knows? We'll see. Matrix says, yeah, definitely a great salesman. A great salesman doesn't walk into the room and say, hey, it's cheap, you should buy it. That's not sales. That's not sales. Okay. So anyways, look at all this is golden, man. This is a pretty nice, enjoyable move. Interest rates are currently 4% and rising. Which pair is that? USD MXN. Peso! Lovely, tell your mom. The next thing you're going to say is, I don't trade that because the spread is too high. Which just tells me right away you don't understand. Which is fine. You're like, I can't trade this. I'll make up a number. I have no idea what it is. It's 32 pips. I can't trade that. The spread is 32 pips. I can only trade euro dollar, which is 3 pips, for example. But what you're telling me is you don't understand the value of these 3 pips is $3. And the value of these 32 pips is $3. But you'll never trade it because it's 32 pips. And I'm like, yeah, you don't get it. That's cool, but thank you. Why can it go up? Dollar strength. But as the Fed raises, peso's going to raise. Why can't it go up? Well, it can go up. Okay? The thing is, if the Fed raises 25 basis points in March, the Bank of Mexico will raise by 50 points. And then the U.S. raises interest rates in June by 25 basis points. Mexico raises by 50. So by Canada Day, the greatest day of the year, the United States will have interest rates at 0.50, and Mexico will have 0.450. No, sorry, 0.5. Sorry, my bad. Can't do math. I don't do math good. Okay, 5% in the United States versus 0.5. Sorry, 0.5 in the United States, 5 in Mexico. Who wins the game? Yeah! Oh, I love the peso. Love the peso. Okay. That's that. I think I'm spent. I didn't sleep enough last night. Huh? Telling you. Look. Telling you. Oh, bloodshot. I don't look so good. So anyways, I think I'm done. I think that was good. Maybe you could click the thumbs up button. Make me feel nice. Guess that's it. So, day traders, I will see you tonight in Asia to set up yet another day. I invite everybody here to join FX Bootcamp. Like I said, $88 a year. You'll start with 65 hours of hardcore, very detailed, not fluff, not BS training videos. Have you ever seen a course? They're like, there's over 65 videos, and you get there and they're like 5 minutes per video. You're like, dude, seriously? 5 minutes per video? No, this is 65 hours. It's legit, man. I'm telling you. $88 is retardedly stupid. Okay? Cool. The other thing is, like I said at the beginning, I would like for you to visit tradersway.com, open up a demo account, and start a relationship with Traders Way. They earn my loyalty and respect. Maybe they'll earn your loyalty and respect. And if you're like, Wayne, you just say that because you're going to earn money every time I place a trade. No, I wouldn't whore myself out like that. I don't earn money if you place a trade or not. So, peace on earth. May the pips be with you. May your profits be above average. Later, Gator.